Good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, dated December 20, 2022. So we've come to the year end, and I probably people will be going into their festivities, and the festivity season will be starting very soon. And similarly, you can see probably in the market, movement has been can say sometimes volatile, can sometimes say muted. But overall, if you look at the activities on the institutional front, it will probably mostly from the foreign institutional investors, it will mellow down at the moment. So we'll be discussing more of it in the coming slides. And before we go ahead, again, would like to give a small disclaimer that it's not any security, any stock that you might discuss in today's presentation should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. So as I was talking about the FI activities in terms of your foreign investors and probably with your uh, Fed meet behind us, your ECB meet behind us, your BOE meet behind us, probably you can see volumes now probably dropping going forward. That's what probably can happen going because the year-end festivities in terms of your Christmas and the New Year will come in, and your holiday season across the globe, the US, the Europe, the UK will start probably in a day or two, or probably in a couple of days from now. And similarly, if you look at the market reaction, it had breached the 21 DMA on Thursday, went even lower on Friday's session, and from there it kind of reversed in yesterday's session. It was a strong reversal if you look at it, and it came up by around 0.8, 0.9% yesterday, but it's still trading below the 21 DMA. But if you look at it from the global perspective, I mean, the US markets is still being bleeding and post the rate hike. And look at it from a weak perspective, it is still giving negative returns in terms of not kind of a sideways movement like the Indian market, but even yesterday it went down by around different indices by 0.9 to 1.5%. And similarly, if you look at it from 2 3 day perspective, the fall has been happening in the US markets as well. Similarly, if we talk about it, this 21 DMA, till the point in time it's not retaken, can act as a resistance. But looking forward to it, that probably in a day or two, maybe that 21 DMA can get reclaimed. On the distribution day level, we are still at 3, and one distribution day count is expected to get expired in a day. So probably a no distribution day get added during that point in time. The distribution day count would reduce to 2, and probably market is still very comfortable and in confirmed uptrend. But what's happening that we've been discussing about this in the pre-bell sessions as well, and in the mailers as well, that the broader market is not following Nifty's movement. If you look at it from the uh, small cap, the mid caps, and probably the overall advances decliners, it's not. I mean, it's not a broader market movement at the moment. Probably for the rally to be sustainable, the broader market has to perform now or in the coming times, so that probably the entire the breadth of the market improves going forward. Talking about key news, the FI sold in Indian equities worth rupees 538 crores yesterday, and DI bought equities worth rupees 687 crores. The Coal Ministry extended the bid due date till 13 January for ongoing commercial coal mine auction. The domestic air passenger traffic data came in for November, which is up 11.06% YOY. And Indigo lost market share by around 1% YOY to 55.7%. The NBCC backed construction order worth rupees 69.3 crores from Odisha Power Transmission Corporation. Your IRB board meeting is to be held on January 4th to consider stock split. HDFC revised its retail prime lending rate by 35 bips from December 20, that is today. Talking about the global market update, your Dow went down by 0.5%, S&P 500 by 0.9%, and Nasdaq by 1.5%. On the Asian front, if we talk about it, it was a mixed reaction. When Nikkei is trading higher by 0.3%, Kospi by minus 0.1%, and Shanghai by minus 0.6%. Crude oil have also gone range bound and range bound little higher by around $0.5. It was trading around 80 yesterday. It's trading around 80.48 now. And even similarly, USD INR has been range bound as well to 82.6. What's the SGX Nifty indicating for us? SGX Nifty is indicating a muted opening of around 18,450. Yesterday's close was around 18,420. So 30 point up, but we consider it as a muted opening for today's session. And considering your US indices going down, plus even your Asian market indices weak. Apart from Nikkei, you can see probably Nifty can open higher, but the action can be muted. I mean, in terms of like higher by around 0.2, 0.3% in today's session. Talking about your chart of the day, the chart of the day for us is solar industry. And overall, it gave us a very good results in the recent results of Q2 FY23. And even the company increased its revenue growth guidance to 45 to 50%, out of which 15 to 17% will be volume growth and the rest will be value growth. And similarly, if you can see for this quarter as well, where revenue jumped by around 98.9% on lower base, from that as well, the realization jump was around 73.5%. So probably this can materialize going forward. EBITDA margins are expected to be range on the 18.5 to 20% in coming quarters, as the company is expecting your relief in raw material prices. The raw material, that is ammonium nitrate, prices remain flat QOQ, but is expected to soften in FY23 and by at least 10 to 15%. And that's why you can see the some kind of optimism by the management of solar industry. Your major revenue contributor for the company is your Coal India. And apart from Coal India, they're expecting a revenue in the range of 10 to 15%. Government initiatives like Housing for All, Gati Shakti, Atmanirbhar Bharat, all is expected to give positive traction for the company. Order book is strong at 4,008 crores for the company. And overall, they're expecting your EBITDA margins to improve in the coming quarters, as they'll be passing on the raw material rate hikes that probably happened earlier, and it's currently softening. So this the rate hike happens with a lag. So overall, if we talk about it from the business and the fundamental front, it's a really good sign for the company, and overall can be seen in the last few quarters in the results as well. Similarly, going forward, the estimates that's been built up is very good in terms of 2396% increase in your EPS, 25% for 2024 and 79% for 25. From the William O'Neill front, the ratings are very good. The number of funds has been increasing well for the company. That's been a good sign. The previous breakout was really successful, and if you look at it, it's forming a flat base at the moment, and it's been declining on lower volumes, and it's currently around the 21 DMA, and the fall has been on lower volumes. Probably from this point, if the stock finds supports near the 21 and the 50 DMA and rallies from here, probably on above average volume, with 6% to pivot at the moment, and if it can show signs of good accumulation on near the pivot, where you can see above average volumes and a breakout on above average volumes, for the stock, it can be a good ideal candidate where probably all parameters have been satisfied, and you can see an above average breakout on above average volumes as well. So that's it, and thank you from my side, and stay tuned to the space of Pre-Bell with William O'Neill India at 8:45 a.m. sharp from Monday to Friday.